Raghu, hi. Thanks so much for making time and speaking with us. Just begin by discussing the growth drivers for you going forward, because it's a business which is a lot unorganized as well. A lot of players are coming up in the organized sector as well. What's your market share? What's your growth driver? And how the client conversations have been shaping up for you?
Great. Thank you. And thank you for having me. Good that you asked me. This is a high growth market. The facilities management business, the integrated facilities management business, and our business support business. The market has been growing at a CAGR at about 15%, around that. We have been growing at about 20% last 5 years, including the COVID year. So this is a big market. It's a market which is being consolidating. And also with the new regulations and the new wage code coming, I think this will get more and more regulated and consolidated.
Okay, and you expect your growth rate to continue to be better than industry and increasing the market share as well?
Yes, of course. We roughly have about 20% market share now. We would continue our endeavor is to improve that. And we would definitely like to grow better than what we did. But 20% growth itself is a very good number.
Absolutely, Raghu. This is Vinny joining in the conversation as well. Good afternoon. Over the last couple of years, also what I'm seeing in terms of your numbers, obviously revenues have managed to almost double versus FY21 when I'm looking at it. Profitability front also a bit. Is a bit subdued because profits have gone down when you compare to FY21. Any specific reason for that, and what is the growth trajectory in terms of the revenue that you're envisaging for the next 3 to 5 years? If you could just give us an indication.
Good. We had actually mentioned this in our RHP, but anyway, I'd explain for the viewers. We will grow definitely at about 20% historically. That's what we have done year on year. Now, profits in 23, we will see it lesser because it is not the adjusted profits. We have an item which is a balance sheet item where we had bought an asset, which is why we bought inorganically, we bought a company. The end is, the new accounting system is, the treatment is the capital in nature is still flowing through the P&L. So if you look at our adjusted EBITDA, it's about 145 crores. Now there is a 45 crores of capital item sitting in the P&L. Now, if you add that, the profits will be dramatically different. Our ROC will be dramatically different. Because I'm constrained not to give the number, I'm not giving, but then anybody can just add back that you will get the profitable. See, it has not gone up. Actually, the profits have gone up by 28%.
That point is taken, but what about the margin trajectory? The number has been close to that 7% mark. I do understand, of course, it's a low margin business, but nonetheless, what's the expectation there? Are you looking at adding the value added services to increase that? And also, you talked about the acquisition that you did in the past. Any more in the pipeline?
Yes, we have a 80 crore blind pool in the RHP, in the issue, which would go towards acquisition. However, our acquisition, we will not do anything wild. We would do it in the BSS space, that is the value-added business services space. So that is what's going to happen. Every year we have done an acquisition. We will continue to do that. Roughly, we will add about 25-30 crores of EBITDA by inorganic growth year on year. That's the plan. That's the strategy.
Okay, so that's the plan and strategy. And within your various segments, because of course you cater to a lot of them, right from mailroom to airport to audit and assurance to background verification, etc. Is there anything specifically that stands out as a growth driver? Because of course washroom and feminine hygiene care solutions is also one part of the business. Talk to me about which is the one which is growing the fastest for you.
Okay, what's growing fastest for us is our sales enablement business. That grows about 30-35%. Whereas all other business grow around 20%. So the fastest is that. So that's the space we will concentrate and focus on more. Now, feminine hygiene is a very unique business where we give the bins, which is a patented bin, where the safe disposal of sanitary napkins. So that is also growing very fast and it's a high margin business.
Okay, on that note, Raghu, we let you go. Appreciate you making time and speaking with ET now. So that's the latest coming in. This is the last date for subscribing to that IPO is today. But